Good morning, everyone. Welcome back to Finance with Nagendra here. It's Monday, August 10th. Grab your coffee or breakfast. Let's walk through today's key market updates before the opening bell rings. First, we will see world markets, the weekend overnight wrap. Let's start with the big story from Friday. The July US jobs report was a shock. The US economy unexpectedly lost 23,000 jobs against an expected addition of 80,000. And the unemployment rate actually ticked down slightly to 4.1%. Normally, a weak jobs number would spook markets, but Wall Street read it as bad news is good news because a cooling labor market means Fed rate is far less likely to raise rates and could even lean toward a cut. The result, S&P 500 hit a fresh record close, up around 0.6%. Nasdaq surged by 1.3%. Led by a big bounce back in chip stocks. The Dow added 0.28%. It was the second straight week of gains. The S&P was up 3.6% for the week and Nasdaq an incredible 5.2% thanks largely to the semiconductor stocks. In Asia this morning, that optimism is carrying through strongly. Japan's Nikkei is up a sharp 2.04% and South Korea's Kospi is up by 1.05%. Both led by chip stocks like SK Hynix, Samsung and Taiwan's chip makers. Tracking Wall Street rate cut optimism, Hang Seng is also up by 0.81%. One thing worth flagging for early trade, Dow Jones futures are actually down slightly this morning, up about 0.11%. So while Friday's cash close was a record, the futures market is showing a touch of caution heading into today's US session. Worth keeping in mind that the positive Wall Street story is not carrying forward with full conviction into today. Now here is the complication. Crude oil. Brent crude is trading around 84.37 a barrel this morning, up about 1%, as uncertainty returns over the Strait of Hormuz. Iran says a shipping lanes arrangement with Oman is nearing completion, but it's still demanding wider concessions from Washington. So this is not resolved yet. For India, sustained high oil prices are uncomfortable. They pressure inflation, the rupee, government finances, and the margins of oil-sensitive companies. Gold touched a 2-month high above $4,350 an ounce on Friday, but has actually pulled back a bit this morning, trading around $4,320, down about 0.5% as some of Friday's safe haven buying eases off. Still elevated by recent standards, just not extending Friday's spike. On bonds and currencies, the US 10-year Treasury yield eased around 4.64% following weak jobs data. US dollar INR remains a key one to watch given the crude oil pressure. So what's the world market saying? It's cautiously positive but genuinely mixed. Wall Street's record close and a strong Asian session this morning, especially that sharp Nikkei move, are real positives. But crude oil holding near $84, Dow futures dipping slightly and gold cooling off is a touch all suggests that this is not clean on directional signal. Now let's see the key news and data, what's moving markets today. First, the Strait of Hormuz situation is still unresolved. Iran is reportedly close to a shipping lanes arrangement with Oman but continues to demand broader concessions from the US. Until this is fully settled, expect volatile crude prices to keep weighing on OMC's aviation, paints and tire companies, while supporting upstream players like ONGC and Oil India. Second, it's a heavy earnings Monday. Nearly 20 companies report today, including Vodafone Idea, Bosch, AstraZeneca Pharma, Bharat Forge, Gland Pharma, InfoEdge, and Z Entertainment. A few results are already out and worth flagging. Titan posted a strong quarter, net profit jumped to 62.9 year-on-year, revenue up 29.3% and margins expanded to 14.2%. This is a clear positive for the stock and consumer or retail sentiment broadly. Oil India reported a massive 253% year-on-year jump in net profit with a robust 51.3% EBITDA margin, a direct beneficiary of higher realized crude prices. PFC posted modest 2.1% profit growth but declared an interim dividend. Kainos Technologies saw a profit decline of around 24.4% year-on-year despite strong revenue growth. Margin pressure is the story there. Worth watching for read-through to the broader EMS electronics manufacturing space. The third, RBI's draft proposal on revolving credit products is still an overhang for NBFCs and private banks. This was the story that dragged financials on Friday, like Bajaj Finance fell nearly 6%. And it's worth watching if there is any follow-up regulatory clarity today. And fourth, keep an eye on monsoon. IMD has issued a heavy rainfall alert for parts of the country through August 15th, which is relevant for agri-linked and FMCG rural demand stocks. Let's see Indian markets today. Friday was a weak session. Sensex fell 0.58%. Nifty dropped 0.27%, dragged by financials and the RBI draft norms news and by raising crude oil prices. Auto and IT were the bright spots, up by 1.4% and 1% respectively. But mid-cap was up 0.22, small-cap down marginally. Given today's mixed global setup, a positive Wall Street Asia handoff against a crude oil headwind, expect a cautiously positive to flat opening, with stock-specific action dominating given the heavy earnings slate. What are the sectors to watch? IT and auto, because Friday's leaders and global chip stock strength this morning could extend support to IT sentiment. PCA financials and NBFCs, because they're still digesting the RBI draft proposal on revolving credit. If we see Bajaj Finance, Bajaj Finserv, ICICI Bank were Friday's biggest laggards. Upstream oil and gas companies like ONGC, Oil India are direct beneficiaries of farm crude prices, so we will watch them. Then we will see OMCs and aviation because they are negative and sustained high crude. And we see consumer and retail. Titan strong beat is a positive read through for the space. And what are the main companies in the limelight today? Titan, Oil India, PFC, Keynes, Vedant Aluminium, Rights and HCL, Hitachi Energy. Several ex-dividend stocks today. Geo Financial Services, Indus Towers, PTC India, Rights and others. So if you see FII and DIA activity of Friday, August 7th, FII cash, they become net buyers for 80 crore. DIA cash, they also the net buyers for 235 crore. Both FII and DIAs turned net buyers on Friday, a genuinely encouraging sign, especially for FIIs, whose selling had been a dominant theme through much of the prior week. This aligns with the broader narrative we have been tracking. FII flows are stabilizing and turning incrementally positive as global rate cut expectations build and the AI memory trade unwind continues to redirect capital toward market like India. And we will quickly see today's Nifty trades up. Gift Nifty is trading around 24,659, up about 13 points. It's very lean as of 8:20 AM IST. That's a narrow premium. Traders are clearly not pricing in a strong gap up despite Friday's positive Wall Street close, which tells you the crude oil overhang is keeping enthusiasm in check. This is a case of partial alignment. World markets are broadly constructive, like strong Asia, record Wall Street close, but Gift Nifty's muted response and the fact that it's actually ticked down slightly from its earlier 6:30 AM level of 24,673 shows the crude oil risk is capping the upside translation into India. What is the trend summary of Nifty? The index closed at 24,570 on Friday, still holding within its broader consolidation range. The setup looks more like a wait and watch session than a clear directional move. Until either boundary breaks decisively, expect stock specific pattern driven by today's heavy earnings slate to matter more than the index direction itself. And we'll see what are the support resistance for intraday, and this is taken from SBI Securities. Immediate resistance would be at 24,700 to 730. A sustained move above opens room toward 24,850 and eventually 25,000. And what would be the immediate support? It would be 24,430 to 24,400. The deeper support would be below 24,300, would weaken near-term setup and expose the index toward 24,000. And we will watch the zones today. A hold above 24,400 on any early dip keeps the near-term structure intact. This is the zone to watch for a buying reaction. Which one is 24,400? If it closes above. A decisive break below 24,300 would weaken the setup meaningfully and could open a path toward 24,000. Sellers would likely find this an attractive zones to add exposure if it breaks with volume. A sustained move above 24,700 and 730 would be genuine bullish signal, opening room toward 24,850 and 25,000. And what would be the event risk today? With nearly 20 companies reporting, companies like Vodafone Idea, Bosch, Bharat Forge, Gland Pharma, InfoEdge, Z Entertainment among them, expect a stock-specific headline-driven session. Retail investors should treat the mildly positive Gift Nifty as a wait-and-watch signal rather than a rush to buy trigger. Staggering entries rather than committing fully at the open is the more prudent approach while the Hormuz situation remains good. Okay, that's your complete pre-market brief for August 10th. Global cues lean constructive, but I'll remain in the wild card. And today's heavy earnings slate should keep the action stock specific. Trade safe, and I'll see you in the next video.
वीडियोस बनाने हैं फिल्मोरा है ना।